Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 16th, 2021. Wanted to get a video out to you guys, just a quick update on some of the things I'm watching here. Mainly, we'll look at the equity markets and the metals. Those are really what's moving lately, providing the most bang for our buck. There's certainly some other trading ops out there now, but those are the ones that I'm really focused on now. And starting out here with NQ, this is the Nasdaq 100 futures. December, especially Christmas, is the season of giving. More gifts are given at Christmas than any other holiday of the year. But that's really the theme here. Christmas came early this year. It started here, although we didn't know at the time that would mark a major resistance level. Since then, we did have a sell signal after that, and another one there that came right on that level, break below both the secondary uptrend line and that 16. We'll call it 16,425, whatever you want to round it off. It's a 16,400 and some point index. So we had, and each and every one of these were mentioned on the site. Every kickback to that level mentioned as an objective shorting opportunity. Including today, and again, it's the gift that keeps on giving. Every time we get there, especially if you're an active trader, get it. If you're a swing trader and you're not an active trader, frustrating. In the sense we did hit my second target on QQQ. And we had some divergence there, so you may wanted to cover that. Again, I wear multiple hats myself. I'm a day trader, I'm an active swing trader, but I'm also with different accounts and different positions and different times. I'm also a long-term swing trader and trend trader where I'll position for a trend. But as far as these active trades go, and I know it's not for everybody, the QQQs, it's been very conducive to trading, and that in anytime you see volatility expansion, you can look at the VIX, or you just start noticing that the up and down days. You're seeing right now we're down 1.5%. Yesterday we rallied from the lows to high, almost 3% in the Nasdaq 100, and that is volatility, my friends. This is when active traders make their money. They don't make their money right here. Swing and trend traders make their money when you have low volatility and a steadily rising or a sideways market. But this is volatility. Anyways, I wanted to do the video now because we're at the next bounce target. Next target 16, rounded off against about 1604, 1600, call it 1605, and this is where I think we'll get another bounce. So just to recap, we were right here this morning when I posted that, got that post out to you about an hour before the open, showing that as an objective shorting op. Then an opportunity to cover on that drop to the first target, which was 16, about 133 or so, and we did bounce from there. This is a 60-minute chart, hourly candles, and the bounce was only, I was looking for a quick bounce, tradable bounce, and this was it. So when you look at the Qs, I'm just zooming in because it's easier on this 1-minute chart. That was that bounce this morning. So we had, again, in pre-market, I gotta open this up, tell it to show. This is where our opportunity was. There's that 401 level again, the gift for QQQ traders to short there. We had a drop of from that point this morning. It was about, well, right now it's already been about 2.6%. But I think we were good for a 2% drop right there. That's when we hit that support level I just showed you earlier today on NQ, and the bounce was about 0.6%, so better than 0.5%. And then the next leg down, and now we're at the next support where I expect another bounce. So if you're an active trader, you got some nice little divergence here on the 1-minute chart as well. We'll probably bounce. And again, your quick bounces. This one could, I think, will get a little bit better than a 0.5% bounce this time around. Look at the 60-minute chart. Again, there's that 401 level. So that's where the short was posted this morning. Or add-on took us down, and this is why I think we'll get a better bounce, because this is a better level right here. 390 right there on QQQ is this gap right here. You have gap support, the bottom of that gap. You have a reaction there, and you had another reaction over there. So again, active traders may want to do that. Longer term swing traders and investors, as long as you stay below 401, and I made tried to be as clear as I could this morning in that post I got out. If you're a very active trader, you keep your stops short. You might want to allow for a 60-minute close, because what happens, you sometimes get a brief pop, stop clearing move, and by waiting till the 60-minute candle closes, that can help avoid whipsaws. It's a double-edged sword, because sometimes when you're waiting for a 60-minute or let's say even a daily candlestick close, well, you can keep going up and you can exceed what would have been your ideal stop range. But again, in a volatile market, you tend to have more of those whipsaws, those brief pops, and trade it as you want. And I also laid out a scenario for a longer-term investor. No matter what happens, at least anytime soon, we're still going to have negative divergence on the 60-minute charts as well as a daily chart here. Remember, that was a divergent high, and this certainly has a possibility, and I still think it does, to mark a significant top in the market before more downside that I've talked about. But if should we push up and make a marginal new high, it's from where we're at right now, or actually I should say from that 401 level today. This is what it would look like. A 4% move would take us up to about 417 right there. And that's certainly well within, it depends on your trading style, but well within a normal stop parameter. It depends on how much downside you're looking for. But if if you think we're coming down here to, let's say, that 342.41 level, that's about a almost 15% drop. So if you shorted at 401, if you've been shorting 401, and you're targeting a 15% drop in the equity indexes, you can give yourself a 5% stop loss on that trade, stop loss allowance, that is, and that's a pretty attractive 3-to-1 risk reward ratio, meaning you're risking 1 unit of loss for every 3 units of gain potential. All right, and then finally, I just wanted to update the weekly chart as well. Remember, this is what I said yesterday. Anything that happens on especially a well-anticipated FOMC meeting day like yesterday, to me is noise, especially if nothing technically has changed in the charts, which I went over that last night. It was a big intraday reversal and rip after the meeting, but it didn't change anything technically. So I'm still waiting to see, how this weekly candle closes. Since last week was kind of indeterminable, we had a check mark after the bearish engulfing there, but we'll see. We'll see where this candle closes. Right now, we're right about where we've been. You can see it again on the 60-minute chart we were on. This is a weekly chart, but we're back down towards the bottom of that bearish engulfing candle. And so the sell signal on the weekly is still very much intact. It has not been negated by a move over that bearish engulfing candle. And a quick update on ES, the S&P 500 futures, because the Nasdaq 100, as important as it is, it's not the entire market. This is ES. I don't have all the lines on this chart. I had to redo this one recently when the futures rolled. We're on the March contract now. You had a bearish rising wedge, sell signal 1 there. And then you recently had another divergent high, and there's an example of a marginal new high. So this previous all-time high right here, you tested it right here, got rejected pretty impulsively, went up and popped it just this morning. But when we popped it, and this is why, as a trader, I look for rallies into resistance in one of 2 ways. I either look at a resistance level, like let's say this, and I get ready to position to go long on a breakout, because that's what a bullish chart pattern will have. Whether it's a straight line or a downtrend line, you're going to have a resistance level that will trigger an objective long entry. But how everybody interprets the chart is different. So some saw that breakout to new highs as bullish, and a breakout to new highs is on face value. However, I often say this: breakouts that occur with negative divergences have a much higher rate of failure. So therefore, I look to short a rally into resistance when there's pretty clear negative divergences. And even if you didn't short the breakout this morning when the Qs were up there, you could have shorted the failure of that breakout. In other words, you zoom in real tight, you can see ES briefly popped that level and then failed. And as I often say, fewer things in trading are more bearish than a failed long side breakout. That was a failed breakout there. impulsive move down. And again, as I'm doing the video right now, I think we'll bounce because we have some pretty good support right here. Decent. It's nothing huge, but decent support on ES, the S&P 500 futures. That number is about 46.97 or so, and we're right there right now. You can see 46.96 as we trade there. There's that. Here's the post FOMC rip. So right now, as impulsive as this has been, we've only taken back about, what is that, maybe a third to a quarter of yesterday's rip. So there's still work to be done. Until then, I think we'll continue to probably see choppy, erratic trading. But here's what the bears want to see. They want to see this whole thing wiped out. If and when, as I suspect will happen, if and when we wipe out that, again, post FOMC rip right here, that's going to be pretty darn bearish. A lot of traders, there was a lot of volume yesterday. And so two things happened. Well, a couple things happened. Number one, Powell came out, had he's been backpedaling, but he's very slow to do so because he's been eating crow on his whole transitory thing, and at least he's backed off that statement. But again, in my opinion and others, he's still too dovish. Whereas, and I mentioned this yesterday, talking about the currencies and gold and silver and all that and what's going on with the US dollar. I said, look, okay, so it's one thing that Powell had the chance to come out and be a little more hawkish, talk about rate hikes, but didn't. He's just winding down his bond program, asset purchases, but not very aggressive. No plans in the immediate future to raise rates. We'll probably see 3 hikes next year. Blah, blah, blah. And that really don't think that's changed much. But then the Bank of England just came out and last night, today, I saw the headline this morning, they are the first to raise. They raised rates a quarter point. And then there's another headline. Let me find that for you real quick. Okay, so the news today. So we know the Fed signaled and they're not hiking now, but they're going to probably start next year. And Bank of England went ahead. They raised, as I said, the benchmark rate. And the ECB, actually, they're saying they're probably not going to raise rates, but they're going to expand their bond purchases. So taking a little bit different path from the Fed. Again, I'm just scanning the headlines there. So that's what's going on, and that's going to segue into our next thing. But again, what I said this morning, if you are not an active trader, and I would imagine the majority of those listening to my voice are not. So far, so good. In the very near term, we'll take it minute by minute, day by day. But so far, so good for the short case. The fact that we've rallied up and so far got a pretty impulsive rejection, but a lot of work to be done. Again, we're only about a third of the way down from where we rallied yesterday, and we need to come down there, probably have a reaction around 46.53, and then we need to take out this level. There's the big level. Anything in between, I don't want to call it noise, but that's somewhat what it is, unless we take out the recent lows in both SPY or the S&P 500 and QQQ. It's still anybody's game. And if you want to look at it, take things for what they are on face value, the S&P 500 is still just barely off all-time highs. So it's hard to get uber bearish. I'm just telling you where I think things are going. And the good thing about trading, and I harped on it yesterday, is to be diversified. Don't, the ES and NQ combined, the S&P 500, Nasdaq 100 are just over 100 stocks, and that's a lot of instruments, but it's one trade. If you're trading the indexes, they're going to move together. One may go up or down more than the other. Usually the Nasdaq 100 is a little more volatile, so it's going to go up more on a good day and down more on a bad day, typically. But again, they're holding the same basket of stocks. There's 500 in the S&P 500, and there's 100 in the Nasdaq 100. But those 100 within the Nasdaq 100, most of those, not all, but most are in the S&P 500. So again, you got a basket of, if I said over 100, I meant just over 500 stocks that you're trading. But it's one single trade. You're just buying ES or NQ. And so like any trade, it's going to work out or not work out. It's that simple, and that's why you don't put all your eggs in one basket. So yesterday highlighted the precious metals, still looking very good, and nice day today. Gold, and remember, gold's more like the S&P compared to the Nasdaq when you look at the other metals, silver, platinum, and palladium. I talked about those yesterday. You get more bang for your buck if you get the call right on those. And so gold, well, we're up a nice, another 2% today. We rallied yesterday. So if I like the charts yesterday, I like them even better today because we held that 1751 support that we kissed at the lows yesterday right after the overreaction of the Fed. We're starting to break above these recent highs right here, and so I still maintain these targets and maybe a lot more for a longer term trader. So that's gold. There's your update there. In other words, looking good. And the Nasdaq 100. Oh, no, I'm sorry, not Nasdaq 100. We wanted silver. Let's look at silver next. And that is SI for silver futures. If I can find that chart. And you can also trade SLV, or you can trade the mining stocks. They're going to move with the metals. Simple stuff. We had the divergent low. Major reaction low right there. Trader stepped in and bought it yesterday after the FOMC announcement, 21,484. And so you had one of my favorite long setups or long objective long entries. Just like this morning in the Nasdaq 100, we had a rally into resistance with negative divergence. Well, we had the opposite here, which is bullish. We have a drop, or had it yesterday, a drop into support with positive, aka bullish divergence. And we're up another 4.5% today in addition to yesterday's gains and close to my 22,619 target again. And then 2310, 2380, etc., etc. So looking good, and we're really looking good on the platinum and palladium. Here's palladium that was mentioned yesterday, up again. In addition to yesterday's nice gains, we're up almost 11% right now on PA palladium futures. So this, the gains in this. Dwarf the gains we're making today on the anybody that shorted the Nasdaq 100 or S&P, and still looking good up here to at least have minimum target, second target, and that comes together with the trend line. So that's around 1884 in the downtrend line. They should come in together if and when we get there. Probably works something like that. And then platinum, last but not least, and PALL is the ETF if you want, it's the ETF for palladium. And then platinum is symbol PL. That's up 4% today, another 4%, and still looking good. Also, just like silver, coming in and testing a recent major reaction low from back here, right there. That's where you could have bought it yesterday. Pull back to support with positive, aka bullish divergence, which indicates more upside, in my opinion, especially with some of the other central banks. Again, even though the ECB is going to hold tight on rate hikes, they're also upping their bond purchases. And again, you had Bank of England raising rates. And so that should, loops us back to my final thing, and then we'll wrap the video up. It should mean more downside for the dollar. In fact, remember yesterday I said we need to break this to trigger the next sell signal on the dollar. Well, we broke it and we've kicked back today, so it's a back test right now. So ideally we get rejected there, move on down to my next target, and then my target after that, which is about 94.60, and that should be bullish and continue to give gold and silver a headwind. And as I mentioned, just like the stock market, the dollar wants to have a rally. Maybe the powers that be want to force it up, and they could put in a marginal new high, but anytime soon it will still be a divergent high. So although I favor more downside from here, I'm still very open to that, and will remain bearish on the dollar as long as we don't take out these divergences down here. And just as the dollar is back testing from below, it only makes sense because the euro is almost a perfect inverse of the US dollar chart, and simply because the euro makes up about 2/3 of the US dollar index, with the yen the second largest component, but at a distant second. It's like 23% something like that. So the euro is, again, really determines where the dollar goes, what the euro does against the dollar. And it broke out and it's back testing now. So if we can hold that back test, you should get a bounce up here at about 114, and if so, that should give more oomph to the metals, and then quite likely work our way up here to my final near-term target, which is 115.70. Okay, we'll wrap it up here. Keep this video relatively short, and I'll update anything else, any other commodities or individual stocks, anything that stands out. I'll get out to you in a separate post with either some screenshots of the charts or another video that's more concentrated to either ag commodities or again anything else that's out there. But these are the big ones right now that are really moving as the metals and the markets. This has been Randy Finney with Right Side of the Chart. Have a great day.